All right. Hello, and thank you for joining this month's Peer Executive Group's discussion on employee benefits. My name is Michele Fisher, and I work with Dan Crowley and his team. And I have the pleasure of introducing today's topic and speaker. So the topic today is the importance of disability income for you and your employees. And our speaker is Katie Lippincott from Principal. She is a regional vice president with their organization and has been in the disability income and insurance industry for more than 10 years. I've had the pleasure of working with Katie and her team in helping business owners find the right strategies. And I think you'll find today's session valuable when thinking about the importance of disability income and your own business. So we do these sessions. We typically do them live. Today is a recorded version, but we typically do them on the third Thursday of every month, and we record the sessions regardless. And those recordings are housed on the Peer Executive Group's website. So with that, I will, without further ado, turn it right over to Katie. Thanks, Katie.
Thank you so much, Michele, and for everybody who is watching this recording for your time. Michele, can you see the screen? Give me one.
I can see the screen. Yep, you're good.
Perfect. So today we want to talk about protecting your income. As business owners, obviously you've put an immense amount of time and effort into building your business. And you know, it's just so important to be able to protect not just the business, but your income as well as the incomes of your employees and the you know, the vitality of your business. So that's pretty much what we're going to discuss today. And to jump off, I want to show you a diagram of what we call your financial house. And what this is, you know, as adults, we look at various ways of protecting not only our current standard of living, but also our future standard of living. So this is a very common visual that you'll see from financial advisors. And at the very top, we start with your pass-on assets. These are things that today we're putting our income toward to set up our standard of living. So for example, pass-on assets could be your home, your car, a variety of things that set up kind of how you're currently living. Underneath that, we're going to put what we call future planning. So things that we're putting money towards that will protect our future, you know, standard of living. So for example, you might be putting money into your retirement plan. You might be putting money into savings, putting money into obviously your business ownership. Things that are kind of going to set us up for a future successful financial life. Under that, we're going to put our protection layer. These are things that, you know, various forms of insurance that we put money into every day without even thinking twice. Things like car insurance, health insurance, property insurance, things that we wouldn't think twice about protecting. But the very foundation of everything in this financial pyramid, this financial house, is our income. Because without that money coming in each month, our ability to put funds towards each of these things kind of goes by the wayside. So that's why in the income protection disability insurance industry, we say that a person's ability to earn an income is their most valuable asset. So without that foundation, if that comes away, then all of those things that we have, you know, all that financial plan kind of goes by the wayside, and we may no longer be able to support that house. So if you think about, again, the things that you wouldn't think twice about protecting your home, your car, from an insurance standpoint, if you think about the cost of the car, the value of the home compared to what the value is of one's income, there's just there's not a lot of congruency in terms of here's the value of your home, here's the value of your income. we don't think twice about getting homeowners insurance, auto insurance. We're actually required to get it in a lot of states. But when it comes to that income, there's a big question mark as to whether or not we're truly protecting its true value. So in this example, okay, car, let's say once you drive it off the lot, I think that $40,000 per month might be a little high. So let's say you have your car, you insure your car. You wouldn't think twice about doing that. Your house, I'll say for myself as an example, I've had 2 house fires. I mean, you better believe that I've had, as much as I can get in terms of homeowners insurance, I have. But then you come to income. And when you see this figure of just short of 5 million, that's not, I make $100,000 per year, I make $200,000 per year. When we give you this figure of just short of 5 million, that is the cumulative amount of money that someone in this example who earns $75,000 per year, is 35 years old, is projected to make during their entire earning years, so up to age 65. That figure, just short of 5 million, why is there such a big question mark as to whether or not we're fully insuring that compared to homeowners and car insurance? And there are a lot of reasons why. There are a lot of objections that we see as advisors for why a business owner, an employee might not think twice about insuring their full income. One of the reasons is everyone says this is never going to happen to me. And when we look at the statistics, and this doesn't matter if it's an insurance company, if it's a nonprofit, a lot of companies do studies to see what's the likelihood of somebody suffering a long-term disability, which we define as something that occurs for at least 90 days of happening during somebody's working years. So between the ages of, we'll say 18 and 65. No matter who does this study, we have consistently found that 1 in 4 of today's 20-year-olds will suffer a long-term disability before they reach retirement age. So while we constantly say, this is never going to happen to me, in reality, this is actually a very prevalent situation that we need to address. So some of the, again, common misconceptions are, it's never going to happen to me. And also, I already have coverage through my business, through my employer, or maybe I have coverage through the government. Maybe I have coverage through workers' compensation. And I just want to kind of point out some of the realities of those as fallback plans for what if this does happen to me. So for starters, when people say this is never going to happen to me, when we think of the word disability, first of all, disability insurance has terrible branding because when you think of the word disability, you think of things like wheelchairs and you think of hospital beds or maybe severe cognitive impairment. In reality, within the industry, less than 10% of our claims experience for long-term disability claims are attributed to major accidents as opposed to illnesses. Over 90% of our claims experience are things like cardiac issues, musculoskeletal issues, so like back pain, knee pain, neck pain, things of those matters, and then mental nervous as well. So things like stress, anxiety, those are actually the reasons why people go out on claim and the bulk of what we're paying benefits for. So while I think it's second nature to hear the word disability insurance and say, I'm in an industry that's not very accident prone, in reality, it's more sicknesses and illnesses that are the reason why people are going out on claim. So this is just a graph to show you actual claims experience for the types of benefits that we're paying for. So, and another thing that these things have in common is that often they're invisible illnesses. So, for example, you might think this is never going to happen to me. I don't see very many people going out on claim for things like this. When in actuality, maybe the person who's working next to you might be having a really difficult time working a full 40-hour week because of the chemo medication that they're on, or because, of a stress related thing, those qualify as claims for disability insurance. And then the second most common thing that we hear is, well, we've already implemented this group plan for our company, so that's going to cover any possible situation. Well, there are a lot of things that you have to bear in mind when it comes to group disability insurance. The first is, so typically a group LTD plan, a group long-term disability plan, is going to cover 60% of pre-disability income up to a stated maximum. So for example, it will cover 60% up to $5,000 per month. Well, if you have anybody in your company who earns over $100,000 per year, they're not getting a true 60% replacement if they were to be solely relying on their group LTD plan. So this is an opportunity for us to take those highly compensated individuals, yourself included as business owners, and make sure that you have the most comprehensive benefits, not the least amount of total income protection. Typically, group LTD plans will only cover your base wage. So as business owners, there's a very good possibility that that group plan might not cover any K1 earnings that you have, any ownership income, any bonus income, any commissions, for example. So when you're evaluating whether or not that is truly your plan to rely on the group LTD, we want to make sure that you truly know what is covered, what's not, and as owners, is your total compensation covered? Or as an owner, could that be an offset actually for the benefits that you could possibly receive? The benefits typically under a group LTD plan are taxable. So while you, in your head, you may say, well, I have 60% income replacement. In reality, you might only have, say, 42 after taxes. And I don't know about everybody who's listening to this, but personally, I need a lot more than 42% of my pre-disability income to meet my monthly expenses. The benefits provided under group plans are typically very conservative when it comes to things like, are we protecting you for what your actual income, your actual occupation is, or are we protecting you for any occupation? If you could, greet individuals who are coming into Walmart, are we going to consider you disabled if you can do that versus what you're actually trained and have been prepared to do? And then another important thing is that the group plans are not portable. So if you were not going to continue with your current business, would you be able to still be protected if you went into another line of business, for example? So with that, I just want to kind of very briefly delve into some of the various solutions that are available, not just to protect your income, not just to protect your employees' income, but also to protect your business as well. And from a personal needs standpoint, so this is just for you particularly as business owners, 90% of the solutions that we offer is truly just what I'll call paycheck protection, making sure that if you were unable to do your job, you're still receiving some form of income from the insurance company. So that's the income protection, individual disability that's listed here on the slide. We also have a slew of solutions for just protecting the business, which I will go into in, again, briefly more detail in the next couple of slides. So just starting with personal needs. Our flagship product is, again, a policy that is based on your health, your situation, your occupation, where if you were to become ill or sick for a period of time, typically it's 90 days, maybe it's 180 days, maybe it's a full year, based on what your particular financial situation is. If you become ill or sick or injured for that amount of time, then the insurance company is the one who's paying you a monthly benefit, whether it's for total disability, partial disability, a catastrophic disability, every month in lieu of that paycheck that you otherwise would have received, those K-1 incomes that you otherwise would have received if you were able to be working. It's very customizable. This is certainly not a one-size-fits-all solution. We want to look at, how much savings you have, how long could you go without an income. I will say that the average claim that we have is between 3 to 4 years. So while conventional wisdom says, let's make sure we have at least a year's worth of income in our savings account in case something unexpected happens, compared to what our claims experience has been, the gap between a year and 3 to 4 years is pretty significant. So that's why considering something like this might be prudent for you as a business owner. But they are very customizable. So if you have a lot in savings, we would probably want to do a longer waiting period to save you a little bit of money. Age certainly comes into this equation as well. Maybe there are some riders that are helpful. Maybe there are some that aren't necessary. So this is just a product that we can custom tailor to your particular situation. And then I'll just briefly delve into the solutions that we have that are more geared toward protecting the business, protecting the employees. So in a perfect world, everyone's healthy, the business is running smoothly, you have your revenue, you have your expenses, the balance between those two are profits. But what happens if you're no longer able to be an integral part of your business? So in that situation, we're at risk of revenues going down, expenses are probably going to go up. You might need to have a replacement for your duties. You might have more medical expenses. And then we are at risk of possible, profits being diminished. So this is what we're trying to address when it comes to the business solutions from an income protection standpoint. And the first one I'll mention is what we call business overhead expense. And this is a product that's designed to keep the lights on in the event that you as a business owner are no longer able to contribute because of an illness or injury. So what this does is it reimburses you for any of those regularly occurring business expenses that would continue even if you're not able to work. So for example, your rent, your mortgage, your employee salaries, your employee benefits, any of those things that show up on your tax return as a business expense are things that would be reimbursable in the event that you are not able to work due, again, to illness or injury. And again, it's called overhead expense insurance. I guess this is a little bit redundant, but this would be probably the most common thing that we would implement. It's also very helpful because it helps the business maintain its vitality, its profitability, so that you can still, maybe you can't take the income, maybe you could, but at least those profits will continue to be level, or slightly decreased, slightly increased, but the business stays healthy, so you can continue to get that K1, that profitability from the business, even though you're not able to be involved in the business. So business loan protection is a part of that overhead expense policy. And what this does is, in the event that you had a business loan of some sort, so the most common that we see is we have a business mortgage. So what this does is it's tied specifically to that business financial obligation, so that if you were to become disabled, then the insurance company would then begin to make those payments to the financial institution that holds that loan. We would begin to make those payments as opposed to you being liable for them. So this is very specific to, you have to have a business loan that we would be able to tie it to, but again, sort of helps us pay that amount in lieu of you having to pay it in the event of an illness or an injury. And then I'll kind of pivot to key employees. So the last two solutions are based on whether or not you as a business owner are ill or injured. Key person, think about the individuals in your company who without them, they're the rainmakers. They're bringing in, additional revenue, and without them, there might be a huge hit to your business. So we call this key person replacement, and this is on the live of that key person, that rainmaker. So that if they were become disabled, we would pay either a lump sum or a monthly benefit tax-free to your company to help you weather that storm, whether you choose to use that money for finding a replacement, compensating a replacement. To be honest, we don't police what you use that money for. So if you want to go on vacation with, that's fine too. But basically, it's a sum of money that you can use to make sure that your company stays healthy financially in the event that one of those rainmakers is not able to be working again due to a disability. Typically, we will write these with smaller to medium-sized businesses where that one individual, if it's whether it's a CFO, it could be your best salesperson, is not able to work due to an illness or injury. And then finally, buy sell. So if you are a company that has more than one owner, typically you want to figure out, okay, well, what are we going to do if one or other of our owners were to become sick or to die prematurely? How is that going to work from a buying that person's stake out standpoint? And so that's what we call buy-sell planning. And insurance aside, this is just a prudent document that you might want to consider drafting with your attorneys to, again, just lay out up front, this is what we consider our business value to be worth. And in the event that one of the owners becomes disabled or were to prematurely die, who are we going to sell to? What's the value of the company going to be? At what time are we going to sell? So that's what we consider to be buy-sell planning. Now, that's the foundation, but underlying, you also want to have a plan to how are we going to fund this buy-sell agreement? Because, I mean, worst case scenario, you're in business for a year, maybe 2 years. Let's in a good situation, say your business is valued at $1 million. Well, after a year, 2 years, are you going to have that $1 million or that $500,000 if it's a two-person ownership situation to buy out your partner? Well, that's where insurance can come in. And on the disability side, we have a product that is that funding vehicle to ensure the buyout in the event of a disability. So that's exactly what it is. We like to tailor this particular product to the terms of a buy-sell agreement. So if your buy-sell agreement says after 1 year, it's going to be a lump sum payout to my partner, that's exactly how we would design the buy-sell agreement or the buy-sell product as well. And that's basically all we have for you today. Thank you very much for your time. If you have follow-up questions, please send them to Michelle, send them to myself. But very much appreciate your time, your attention, and happy to help you with anything that we can do in the future.
That's great. Thank you, Katie. So much valuable information about the importance of disability income insurance. And I think you touched on a lot of topics from an overview standpoint. And I think that's where Dan Crowley can definitely work with the folks that are listening to this call as part of his network. This is a service that he provides, and then he would bring in myself or Katie as needed based on what you're talking with him about. And it's interesting, Katie, I didn't realize this, but the perception of disability insurance versus the reality, and the reality is that 90% of the claims come from cardiac, back pain, knee pain, the mental, nervous, stress, anxiety. So I think when people think of disability, they think of those accidents, those wheelchair, those types of disabilities, but that's not the reality of it. So I really appreciate the overview that you gave. Again, reach out to Dan Crowley directly. if you have any questions about today's video or want to talk more about this particular topic. And with that, we'll wrap it up. And again, thank you, Katie, and thanks for those of you that that watched the video. Take care. Bye-bye.
Take care.